Hello and welcome to your daily dose of Satoshi's news. Today's date is Tuesday, the 5th of August 2025, the year BSV comes alive. Branch your thread to expand your mind with treechat.ai or your post put on chain. Right, let's see what we've got today. Had someone sent this through to me when they were doing some researching using ChatGTP to tell the difference between the genuine Bitcoin and grade coin. And this individual here said, write a realistic hypothetical scenario where BSV flips BTC when BSV is found out as the real genuine Bitcoin created by Satoshi Nakamoto. It has real utility and will soon be able to do 3 million transactions per second via Terranode. This is a hypothetical but realistic scenario. So we'll just go over and see what ChatGTP thinks about this. It's quite a long article, but I think it's going to be worth the read. We've got another one here from what Bitcoin does, called Transcendental Arguments Against BTC, where they go through the white paper here. I think this should be quite an interesting read. Looking forward to going through that one. I've also got to report on here this. I think her name is Elfreta Fengerson. I just saw this video. She calls herself, what's her title here? Podcast host, independent journalist, marketing expert, allergic to tyranny, freedom, and Bitcoin maxi. But she's got interviews here with Michael Saylor, which obviously going to be a massive fail. But initially, I did write to her saying, "Look, can you DM me, please?" So, I mean, yeah, she says she's against tyranny and all that, but I mean, talk about hook, line, and sinker down with the Cabal coin, she's got 103,000 followers. But the reason I did that is because she actually liked one of my posts. So I've not actually heard of her before, but anyway, we'll talk about that. We've got to talk about this thread that CSW found himself involved in with the Justin Bones and Michael Blankenship. I mean, this guy sounds like an absolute douchebag. Look, he's saying this to Craig. He goes, "Oh boy, the lack of technical understanding amongst you folk is amazing." He's talking to CSW. Honestly, absolutely hilarious. You couldn't make it up. We'll have a quick look at the figures. Got some 365 days of Bitcoin history, and then that'll be the end of the show. Right, let's get into it.
Greg says he's Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, them transactions flying free. Just wait for the Terranode, you'll surely see.
Alrighty, here we go. Glad we're not going to make the same mistake as we did yesterday when people are going to see a blank screen in front of them. Here we go, rock and roll. So let's go over this question one more time. Write a realistic hypothetical scenario where BSV flips BTC when BSV is found out as the real genuine Bitcoin created by Satoshi Nakamoto. It has real utility and will soon be able to do 3 million transactions per second via Terranode. This is a hypothetical but realistic scenario. All right, let's get on with it then. So ChatGTP came back with, here's a realistic hypothetical scenario for how BSV could flip BTC if it's proven to be the real Bitcoin. 2026, the revelation. A group of cryptographers and former Bitcoin Core developers leak an archive of early email exchanges signed with keys verifiably tied to Satoshi Nakamoto. The message confirms 2 bombshells. 1, Bitcoin was always intended to scale on chain with no artificial block size limits. And 2, a BSV, or Bitcoin SV, BSV is the protocol that matches Satoshi's original design. While BTC was intentionally altered in 2017 to enforce off-chain scaling, Lightning Network, and high fees. The news spreads like wildfire. Major outlets like Bloomberg and Financial Times run headlines. Well, that's never going to happen. But anyway, evidence shows BSV matches Satoshi's vision. BTC may not be the real Bitcoin. So that's what their hypothetical headlines are going to be. 2017, the breakthrough Terranode BSV enterprise-grade scaling solution. officially launches. Benchmarks confirm 3 million transactions per second and are possible on a live network. Visa, MasterCard, and all global payment systems combined can't match that capacity. Real-world utility becomes undeniable. Major e-commerce platforms integrate BSV for near-zero fee microtransactions. Remittance companies start ditching SWIFT and BTC's $10 fees for BSV's sub-cent costs. Developers launch Web3 on Bitcoin, services that actually run at internet scale. NFTs, tokenized real estate, supply chain data, legal documents, all on chain. BTC maxes mock the development until some major corporation quietly starts moving. Oh, that's very realistic there. 2028, the shift begins. PayPal, Stripe, and Square announce BSV support. Never going to happen. But anyway, citing lower fees and instant settlement. Amazon and Alibaba pilot BSV for digital receipts and micropayments. Global governments, Singapore, UAE, and Switzerland first, start experimenting with using BSV for notarizing public records and digital identity. Bitcoin calls scaling limitations, 7 transactions per second, high fees, congestion, meme pool look increasingly absurd. BTC's narrative of being digital gold feels weak next to a version of Bitcoin that's both sound money and a functioning global ledger. 2029 market realignment. Institutional investors who once ignored BSV start reallocating quietly. A leaked Goldman Sachs memo circulates. If BSV is legally, technically, and historically the real Bitcoin, exposure to BTC carries reputational risk. BTC price stagnates as fees skyrocket during bull market congestion. BSV transaction volume explodes with millions of daily users in gaming, streaming, and fintech apps. Developers move en masse to BSV because the protocol simply works. This is spot on here. Although I don't quite agree with the timeline. I think it's going to be a little bit faster than this. Well, I think it's going to be a lot faster than this. But, you know, the progress is still correct. 2030, the flippening. Yeah, but by 2030, they're hoping to have their totalitarian one world government installed. So I would say that. Yeah, you know, just wait till 2030. BSV surpasses BTC's market cap for the first time. Headlines read, Bitcoin SV overtakes Bitcoin Core. Investors reassess the real Bitcoin. BTC maxes panic as exchanges rebrand tickers. BTC, a Bitcoin Core, a BSV, a Bitcoin. ETF issuers announced they'll transition holdings to BSV for regulatory clarity. Retail investors follow suit. The market decides. Bitcoin SV is Bitcoin. Wow. Key factors that made this realistic: verifiable proof, cryptographic signatures, early emails, end debates over which chain is real. Utility drives adoption. BSV microtransactions, instant settlement, and scalability give businesses and governments a reason to switch. Terranode scaling, 3 million transactions per second, eliminates any doubt that Bitcoin can handle global payment infrastructure. Institutional risk management, large investors won't stay in BTC if there's evidence they're backing an imposter chain. Oh, they're calling it an imposter chain. That's what it is. Network effects snowball. Once major players move, smaller ones follow. I think it's going to be the other way around. I think when smaller players, well, small to medium-sized enterprise players start following, start moving, then larger ones will follow because they'll be taking market share. Would you like me to write this as a narrative timeline, like news documentary script or a fictional Bloomberg report, looking back after BSV Flips BTC? So what would happen to people who are invested in BTC if this happens? Would a likely outcome be that everyone who owns BTC will be able to get their value swapped into BSV? They have a similar supply. ChatGTP continues. He says, great question. And this is where the scenario gets messy and interesting. If BSV were widely recognized as the real Bitcoin and BTC a protocol fork, basically an imposter, here's how it would likely play out for BTC holders. 1. Immediate market shock. Once credible proof surfaces that BSV is Satoshi's original vision, BTC's narrative collapses. Confidence evaporates. Institutions, exchanges, and funds dump BTC to rotate into BSV. BTC's price could freefall, potentially losing 50 to 80% of its value in weeks. Yeah, within weeks. While BSV surges, This wouldn't happen overnight, but the rebranding of Bitcoin from BTC to BSV would create a seismic identity crisis for BTC holders. Oof. Could BTC be swapped into BSV? Technically, no automatic swaps. BTC and BSV are entirely separate blockchains. There's no built-in merge mechanism like a stock ticker change. Realistically, exchanges might offer voluntary swap programs to preserve customer goodwill and liquidity. Example, Coinbase could say, we'll allow you to convert BTC to BSV at market rate, or maybe with a bonus early on. Some DeFi protocols or over-the-counter desks could step in to create BTC BSV peg to make migration smoother. Oof. But this would be entirely market-driven, not enforced. If BTC starts tanking, late sellers could get crushed. Early movers will benefit most. What happens to BTC network? BTC doesn't vanish. It still exists as a blockchain like Litecoin or Dogecoin. But with developers leaving, exchanges delisting, merchants ignoring it, it could become a ghost chain with a niche collector market. Think of it like digital Beanie Babies or for maxis. Yeah, honestly, the maxis might do that. Absolutely insanity. But they could. Honestly, the maxis are absolutely nuts. BTC holders are likely outcomes. Early swappers, smart money. Sell BTC high, rotate into BSV while momentum is shifting, potentially making profits. Late holders, bag holders watch BTC value erode while BSV moons. Some might hold out of stubbornness, insisting BTC is still the real Bitcoin, even as adoption dies. Institutions, they'll jump ship fast. ETFs, hedge funds, and custodians will follow the brand and swap BTC exposure into BSV. While supply parity matters, BTC and BSV share the same fixed supply cap, 21 million. This makes the flip cleaner than if it were some random altcoin. Once BSV is accepted as the real Bitcoin, every price model BTC maxis use, stock to flow, etc., applies to BSV instead. Now, that stock to flow model was crap, absolute BS. They're thinking it's a stock. It's not a stock. It's a commodity. Investors mentally transition easier. Okay, same supply, same halving schedule. I'll just hold BSV instead. Bottom line, there won't be an official swap, but market forces will create one naturally through exchanges, OTC markets, and arbitrage. Early movers win big. Late movers could be left holding a rapidly devaluing BTC. BTC might linger like a zombie chain, but liquidity and relevance would drain into BSV. ChatGTP asked, do you want me to write a short fictional day after news report, like Bloomberg or CNBC, describing how BTC holders were reacting to the flip, panic, swaps, exchanges stepping in, etc.? Yes, please. So ChatGTP continues. Here's a financial Bloomberg-style news report written as if it were the day after BSV Flips BTC. Realistic, grounded, and focused on the market response. Panic and rotation. Bitcoin SV flips BTC in historic market shakeup. April 14th, 2030, Bloomberg Crypto. In a stunning reversal that has upended the global cryptocurrency market, Bitcoin SV BSV officially surpasses BTC in market capitalization last night, marking the first time BTC has lost its top spot since 2009. The market reacted violently. BTC tumbles more than 42% overnight, wiping out over $400 billion in market value as institutional funds, exchanges, and retail investors rush to reallocate capital into BSV. Quote here, this is not just a flippening, it's a full-on redefinition of what Bitcoin is, said Amy Zhao, managing partner at Orion Digital, a Hong Kong-based crypto hedge fund. BSV has always claimed to be the original protocol, and now the market has finally accepted that. How we got here, the flip comes day after a consortium of cryptographers and ex-core developers released verifiable emails and signed messages linking Satoshi Nakamoto directly to the design philosophy behind BSV, on-chain scaling, microtransactions, and Terranode architecture. Terranode, which launched last month, successfully demonstrated 3 million transactions per second on a live network, a milestone BTC had no technical path to replicate. Exchanges begin swap programs. In response to the chaos, several major exchanges are offering BTC to BSV swap programs. Binance announced a limited-time party swap program allowing users to convert BTC to BSV 1-for-1 for the next 72 hours. Coinbase followed suit, but at market rates, offering streamlined conversion tools to simplify the transition. Kraken went further, declaring BSV the legitimate Bitcoin and renaming BTC to Bitcoin Legacy BTCL. That's hilarious. This is about minimizing user confusion, said Jesse Powell, Kraken CEO. Satoshi's original vision is alive in BSV. That's now the benchmark for Bitcoin. This is hilarious. Investor fallout. Retail investors are reeling. Crypto forums are flooded with posts like, is BTC dead? And how do I swap to BSV? Many are learning the hard way that there is no automatic upgrade path. They must manually convert their BTC holdings to BSV, and prices are moving fast. One Reddit user posted, I thought BTC was the real deal, woke up to see it down 50% while BSV is mooning. I missed the swap window. I feel sick. Meanwhile, hedge funds and institutional ETFs are quietly dumping BTC exposure. BlackRock's iBitcoin fund announced it is liquidating all BTC holdings and transitioning to BSV-based products by the end of Q2. Government and enterprise move. Singapore's Monetary Authority confirmed it will pilot BSV-based settlement systems, calling BTC a dead-end technology. Amazon and Visa announced expanding trials for micropayment systems using BSV, citing its low fees and scalability. Current stats as of 9 a.m. EST, metric BTC versus BSV, market cap down $620 billion, BSV up $638 billion. 24-hour price change, BTC down 42%, BSV up 61%. Really? Be a bit more than that. Transaction volume on BTC, 398K. BSV, 98 million. 89 million. And average fees on BTC, $12. BSV, tenth of a cent. What's next? Analysts say BTC may linger on as a speculative asset. Give me a break. But its days of the face of Bitcoin appear numbered. BTC is now like MySpace. It was first, but it got stuck. BSV is Facebook, scaling to meet the real-world demand, said Mark Weinstein of Wave Financial. The market seems to agree, as one ex-former Twitter user quipped, if BTC was digital gold, BSV is digital electricity. The lights just came on. I'm loving that one. If BTC was digital gold, BSV is digital electricity. The lights just came on. Loving that. That's quite creative. Hey, and that's the end of the article. That was great fun. I actually pretty much agree with all of that, but it's just my timelines are a lot sooner and a lot faster, should you say, in terms of like the flippening. But yeah, fantastic one there. Excellent. Thank you for that. Right, let's get on to this. This Substack article by What Bitcoin Does. So this is Transcendental Arguments Against BTC, how each section of the Bitcoin white paper refutes BTC's narrative as Bitcoin. Is BTC the same as Bitcoin? And then we've got Bitcoin versus BTC. BTC claims to be Bitcoin, but Bitcoin is not a brand or belief system. It is a rule-defined protocol outlined in the 2008 Bitcoin white paper. If BTC depends on the white paper for its identity, but contradicts the very rules it presupposes, then it refutes itself. This is a transcendental contradiction. A system cannot deny the foundations it requires to justify its own existence. This article presents BTC's best case interpretation for each section, followed by a transcendental argument that shows how BTC depends on the very principles it discards, making its position self-defeating. Section 1, Introduction. Commerce on the internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. BTC presupposition. Bitcoin still functions as a peer-to-peer system without trusted third parties, even though most users rely on custodial services or off-chain networks to send and receive payments. Transcendental rebuttal: by redefining Bitcoin as digital gold and outsourcing payments to Lightning, BTC destroys the system's purpose as peer-to-peer cash, proving it needs what it abandons. Absolutely. Section 2, transactions. Quote here, we define an electronic coin as a chain of digital signatures. Each owner transfers the coins to the next by digitally signing a hash of the previous transaction and a public key of the next owner and adding these to the end of the coin. BTC presupposition: a Bitcoin coin remains valid and the ownership remains provable even if the digital signatures are no longer part of the transaction structure itself due to changes like SegWit. Transcendental rebuttal: by detaching signatures from the transaction structure, BTC severs the chain of digital signatures that defines a coin, making it impossible to verify ownership in the way the protocol requires. Spot on, spot on. Section 3, timestamp server. Quote here, the timestamp proves that the data must have existed at the time, obviously in order to get into the hash. BTC presupposition: the base chain maintains timestamps that secure transaction history, while Lightning handles speed, eventually settlement anchors onto the blockchain historical record. Transcendental rebuttal: if the guarantee of the chronological order depends on timestamping, then performing transactions off-chain without the mechanism removes the ability to prove the very thing Bitcoin claims to solve. Absolutely, absolutely. Section 4, proof of work. The proof of work also solves the problem of determining representation in majority decision making. If the majority were based on one IP address, one vote, it could be subverted. Proof of work is essentially one CPU, one vote. BTC presupposition: proof of work secures the network against fraud and attack, but social and developer consensus can check against minor overreach to ensure long-term rule integrity. Transcendental rebuttal: if work determines consensus and makes rewriting history economically unfeasible, then allowing non-miners to override it introduces subjectivity into what was meant to be objective and cost-based. Absolutely, absolutely. Section 5, network. Quotes here, the steps to run the network are as follows. Nodes also consider the longest chain to be the correct one and will keep working on extending it. BTC presupposition: nodes running the reference software enforce consensus rules, ensuring that only valid blocks are added regardless of the amount of work behind them. Transcendental rebuttal: if nodes can reject the most worked chain based on social or developer rules, then proof of work no longer governs the network. Absolutely, turning Bitcoin into a democracy of interpreters rather than a rule-based system. Spot on. Spot on. Section 6, incentive. The incentive may help encourage nodes to stay honest. If a greedy attacker is able to assemble more CPU power than all the honest nodes, he would have to choose between using it to defraud people or using it to generate new coins. BTC presupposition: block rewards and limited space create a free market that will eventually sustain minor incentives as the subsidy diminishes, preserving security through scarcity. Transcendental rebuttal: by suppressing transaction volume and pricing out demand, BTC removes the fee-based economy it needs to survive post-subsidy, destroying the incentive it presupposes. Yeah, absolutely. Absolutely. Section 7, reclaiming disk space. Once the latest transaction in a coin is buried under enough blocks, the spent transaction before it can be discarded to save disk space. The BTC presupposition: through pruning and SegWit, BTC allows nodes to discard older data while still verifying the validity of the chain using compact proofs and headers. Transcendental rebuttal: if digital signatures define ownership and those are moved or pruned, their verification becomes partial and trust-based, reintroducing the very reliance Bitcoin was meant to eliminate. Yeah, spot on, spot on. Introducing third parties again, would you believe it? Section 8, simplified payment verification. The public can see that someone is sending an amount to someone else, but without information linking the transaction to anyone. This is similar to the level of information released by stock exchanges. BTC presupposition: simplified payment verification is possible but discouraged for security reasons. Full nodes or custodial solutions are safer. Yeah, third parties. So the transcendental rebuttal, Bitcoin depends on simplified payment verification to scale without centralization. Discouraging it forces users into dependency, making BTC reliant on trusted intermediaries to function and defeating the very condition that enables decentralization. Absolutely, absolutely. Section 9, combining and splitting value. Quote here, to allow value to be split and combined, transactions contain multiple inputs and outputs. BTC presupposition, users can freely split and combine their coins as needed, even though it limits block size and high fees make such behavior economically discouraged or impractical in most real-world use. Transcendental rebuttal, if economic constraints punish users for performing basic cash functions like splitting and combining value, then BTC disables the most fundamental behavior described in the white paper, as it being peer-to-peer electronic cash. Section 10, privacy. The public can see that someone is sending an amount to someone else, but without information linking the transaction to anyone. This is similar to the level of information released by stock exchanges. BTC presupposition, privacy tools like Taproot and CoinJoin are available while maintaining transparent auditing on the base layer to comply with legal and institutional expectations. The transcendental rebuttal, Bitcoin was designed so your identity is protected by default. No names, just keys. BCC takes that away. It shows your entire payment history unless you figure out how to hide it. That means BTC depends on outside tricks to protect you, when Bitcoin was supposed to protect you by design. If you have to trust a tool to hide your history, you're not using Bitcoin. You're using a system that puts you at risk, then tells you to fix it yourself. Yeah, that's exactly what's going on. Section 11 calculations, the system is secure as long as the honest nodes collectively control more CPU power than any cooperative group or of attacker nodes. The BTC presupposition, security is derived from the combination of proof of work, full node enforcement, and community consensus, a balance that prevents domination by any single entity. But the rebuttal to that is if miners do the work and yet are overruled by those who do not, then the cost function that secures the system is redundant, is rendered inert, refuting the very model that makes Bitcoin trustworthy. Yeah, absolutely. Conclusion, BTC presents itself as a hardened evolution of Satoshi's system, trading utility for security and function for symbolism. Yet in each section, it prevents the language of Bitcoin while denying its structure. It disables transaction utility while claiming economic soundness, removes simplified payment verification while claiming decentralization, and breaks the chain of digital signatures while claiming to preserve ownership. In doing so, BTC relies on the very principles it abandons. Bitcoin, as defined in the white paper, is not an idea. It is a rule-bound system of interlocking assumptions. Break one and the others collapse. Only one implementation continues to preserve that system in full. Bitcoin SV. Oh yeah, spot on. Loving that. What a great article. Right, let's get on to this Ephra Ferguson. So yeah, the reason I was tagging her is because she liked. Oh, there we go. Look at that. There, she's there. So she liked my repost of her tweet with regarding the old jibby jabby. So then I was looking at her here, and she interviewed Michael Saylor, and she's got like 103,000 followers. So I said, like please DM me and I'll try and explain it. But I didn't realise that she was already all over kind of like a BTC. But I mean, what a mistake to make her. Calling herself allergic to tyranny. Allergic to tyranny, but clearly not allergic to deception and deceit and bullshit. Because she's interviewing Michael Saylor there. Like, dear oh dear. Look at that. She's all over Gregcoin. What a mistake to make her. And this video, this interview with Michael Saylor has got like 400,000 views. 400,000 views. Good grief. fail, but never mind. We can always put you right. Right, let's get on to this then. So Justin Bone said that BTC does not succeed when the price goes up. BTC only succeeds in its original goals by achieving mass adoption on the layer one as money. Oh. Unfortunately, this is impossible as BTC was hijacked and they will keep the capacity so low that it can never be adopted by the masses as money. I've got Justin Bones blocked because I'm assuming he's a B crasher, shitcoiner. Never mind. But then this Michael Blankenship butted in. He said, "You seem to have no faith in the power of cryptographic innovation to extend Bitcoin's utility through smarter contracts and connected layers. This base layer isn't the ceiling; it's the foundation." Oh dear, oh dear. And then Craig butted in. He said, "The stupidity here is industrial strength." Absolutely. Cryptographic innovation isn't money. Smart contracts aren't payments. The masses don't care about your tech stack. They care about whether they can buy a coffee, pay a bill, or settle an invoice without fees that look like rent. This obsession with connected layers is the last refuge of people who can't make the base layer work. Scaling is the issue. It has always been the issue. Everything else is a masturbation dressed up as innovation. You don't build on a foundation that can't clear 1 million transactions per second. You don't layer the complexity over a core that's functionally useless. If your system needs roll-ups, bridges, sidechains, lightning spaghetti, or committee signature acrobatics just to simulate what a Visa terminal does in 1997, you've already lost. The base layer is the ceiling when you hard cap it into irrelevance. All this babble about faith in cryptographic progress is the kind of detachment you only get from people who think money is a software experiment. Not at all. You don't extend a Bitcoin's utility by abstracting it away from usability. You make it useful by letting people actually use it. No scaling, no mass adoption. No mass adoption, no money. End of story. Yeah. And then this Michael Blankenship said here, "Oh boy, the lack of technical understanding amongst you folk is amazing. Again, if you want to ask questions, I don't mind explaining it to you. My question to you is, why would anyone denominate in payments what they won't hold for preserving value? No institutional funds or nation states are holding some random altcoin. Why? They aren't nearly as liquid or decentralized as Bitcoin." Well, he's talking about Gridcoin there. If you want to believe something neither as decentralized or liquid as a Gridcoin will win, you can. That's likely where we disagree. Honestly, I mean, I think he's just a cabal shill by the sounds of it, talking absolute nonsense. Craig has said here, "You're not very good at this. Lightning doesn't scale for a start, but that's just the first step in dismantling the cathedral of your confusion. You spout terms like decentralized as if they fell from the clouds fully formed, while misapplying concepts you've never traced to their origins. The term decentralized comes from Varon, 1964. It referred to organizational control structures, not your mangled crypto Leninist fantasy. The Marxist squattle you're hawking, dressing it up in network topologies you don't grasp. It's like calling a street mime an opera singer because they're both silent. Your full nodes do nothing. They don't vote. They don't validate anything the miners don't already accept. They are spectators, ballasts, decorative furniture for ideologues. And then you take Lightning, an off-chain IOU ping-pong network with a success rate that drops off a cliff as payments rise, and you dare call that scaling. It's not even part of the blockchain. It's an escape hatch for a broken system, a clumsy workaround that doesn't preserve finality, doesn't ensure auditability, and doesn't function at economic scale. You're selling ideology dressed up as architecture, and none of it stands up when anyone who actually understands systems, economics, or computing takes a look." Oh, scathing there from CSW. Absolutely brilliant. And Bitcoin SV 2025 said, "Oh boy, you absolute bellend." Lumping in a guy with more PhDs than your country with with you folk and saying here's a lack of technical understanding. You condescending TWAT. Yeah. Couldn't have said it better myself, really. Yeah, absolutely brilliant. Brilliant. All right, let's have a quick look at the figures because there was a 900 megabyte block that came through on Bitcoin the other day. Hey, look, block size is back up 94%, transactions 42%. We've got a 104 megabyte block in this column of 30. 69, yeah. I think the 900 megabyte block was earlier this morning. So currently 57,000 times cheaper to transact on Bitcoin than Gregcoin. Oh, mining Bitcoin at a 17% comparable loss. That's come down a lot. 13% more profitable to mine on Fisher Price Cash over Bitcoin. So have a look at the politics in the pie charts then. Yep, thank you, CoinDance. Here we go. Gregcoin, other miners 4%. Bcrash, other miners 20%. Fisher Price Cash, other miners about 40%. And yeah, Bitcoin, again, CoinDart's not really showing us the figures there, but we've seen them before. In fact, we will have a quick look while we're here. It's on chain. That's what we want. Is this going to load? Be nice if it did. I might have to come back to that then. Oh no, there we go. Excellent. Dashboard is what we're after. 24-hour stats, 325,000 transactions. Oh, there we go. QD Link 28, Kuv 26, Tal 23, SA100 10, and Gorilla Pool 7.9. Nice. All right, let's have a look at the overall market here. Market cap $3.6 trillion. Gregcoin down $113,000. ETH 3,579. XRP dipping below $3. Binance Coin $751. Behind that is Sol. Oh my god, like Tron, ADA, good grief, Doge. What a joke. What an absolute joke. Where is Bitcoin? Oh, 101. Just outside the 100. Look at that. Below Brett coin. You've got to be kidding me. $25.42. So have a look at the liquidity here. So Huobi apparently in the lead. CoinDCX, Gate.io in third. Zadixian in fourth. Again, I'm not really too sure if I agree with that. Liquidity changing. Hit BTC taking the lead. Followed by Exco Exchange, Changey Pro, KuCoin in fourth in terms of liquidity. CoinW, Bitmart, Zadixian. Huobi right down there in terms of liquidity. What have they got on their exchange then? Wow. All right, let's get on to some 365 days of Bitcoin history on the 5th of August 2024. CSW said the COPA appeal has been filed. Yeah, look at that. The application to appeal has been filed. There we go. I mean, what an absolute shambles that was. An absolute shambles. I don't think he's going to get through with it. There's no point. There's usually no point. There is no judge in the world that is going to allow that appeal because they're never going to allow it. I think they tried to do him for contempt of court anyway. You know, bringing in more claims. But yeah, there's only utility left really. That's the only thing that's going to save Bitcoin and save the world from a totalitarian dystopia. Dystopia, yeah. Right, just checking my screen there. Yep, there we go. That's been recorded. Excellent. Right. So, yeah, I'm going to be back soon. Looking forward to getting back on my desktop again. So until then, be aware, take care, stay safe out there, and we'll see you in the next one.
The king still has one more move.